All right, today's been a roller coaster. We got the CPI and it was higher than market analysts expected at zero point 0.4 in September. Markets, they basically sold off. They dumped on the data, but largely I think it was just profit taking. A positive aspect of the report said that real average hourly earnings fell 0.2% on the month. And you're like, Josh, why would it be positive that earnings would fall? Again, we need to see the labor market loosen up. Unfortunately, people have to lose their jobs to truly show the Fed that the economy is slowing down. And right now, the labor market's been strong. People have been getting higher wages and more job offerings and listings have been hitting the market, which has been one of the reasons why the Fed has not pivoted or turned dovish. Basically, the markets had pushed up a ton and then they simply pulled back on that data. Again, just largely profit taking. I will just tell you guys, the markets have run up so much in the last week that if you didn't do any profit taking, then you fit the old cliche, which says that bears make money, bulls make money, but hogs get slaughtered. Just want to remind you guys, keep those stop losses in. A number of my positions today were knocked out via stop loss in profit. I'm glad that I protect every trade. One of the immediate responses of the market was seen in the bond yields popping off. They climbed after the CPI report. You can see that by looking at the TNX. And then the dollar, man, what a massive spike on the daily candlestick chart. But if you zoom out and you look at the dollar overall, it's really come down quite a bit this year. And so even though we've spiked, it doesn't necessarily mean that the markets are now ready to sell off. We're just under the pressure of the dollar rising and we're under the pressure of the bond yields rising. If they cool off, then that just allows the markets to continue to climb. Now, the biggest problem that the market has is that there's no breadth to the rally. And what that means is that largely it's the S&P 7, the Magnificent 7 that continue to push the QQQ, the NASDAQ, and the S&P 500 higher. It's just a handful of stocks when most stocks are not participating in the move up. The way that that's largely measured is stocks over their 200-day moving average, stocks over their 50-day moving average. Right now, very few stocks are over the 50-day moving average. Just a handful are making all-time highs. More have been making 52-week lows. But I will say one thing, I will report one thing, that all of the resistance points, the target points that I gave you on the Magnificent 7, September 28th, every single one of those target points was hit. And so if you had bought all of those stocks the day that I did that report, your entire portfolio would be up. I had said on that day that we were in oversold conditions and there was plenty of room up to hit those resistances and that I would not get bearish on these markets until we hit a minimum of those resistance points. But guess what, guys? Now it's time to do a review of where support and resistance is for the Magnificent 7, but I'm not giving you guys that today. I got to spend some more time in the charts, but I'm going to give that to you guys next. I'm going to do an analysis of where I think the Magnificent 7 are going to go. I might throw in Netflix. Mostly I told you the last time, I told you when I did the last review, I said that the worst stock out of the Magnificent 7 or 8, only 8 if you count Netflix, was Netflix. I said Netflix had no sign of life and looked to me like it could be falling, and that's exactly what it did. So I'm going to review those with you guys. I'll give you guys an update here in the next couple days. If you want to get those type of technicals, if you want to get that analysis from me, then you've got to hit that subscribe button and hit the YouTube all notification bell. Personally, I don't see how you would want to miss it. So this is the Stocks with Josh show. I want to thank the family for joining me today. I want to thank you guys already for hitting the like and just let them know in the comment section whether or not you think this page is worthy of a like and subscribe. Appreciate each and every one of you guys. Okay, today I'm actually going to be talking about a dirty little trade secret, a penny stock that I've actually been making some money on. Some of you guys are going to say, why didn't you share it with us? Well, I'll tell you one reason, because whenever I share great technicals on solid blue chip companies like the Magnificent 7, a lot of folks don't bother buying it. But if I give this group a penny stock, they just go nuts. They load up on it. And then like a month from now, they'll tell me, Josh, all I own is some NEO and all I own is some Sound and I'm down 50%. Guys, penny stocks are only momentum trades. They're not buy and hold. Now, I actually did talk with you guys about this penny stock before it initially popped up, but now I'm going to share something with you, some technical analysis of my re-entry. Yesterday, I made an additional 36% on a momentum trade on this stock. And the stock we're going to talk about today is ICU, SeaStar Medical Holding Corp. And before I go into the technicals or tell you what this company does, I have to give a shout out to Mags, M-A-G-S, from the Moomoo Chat. That's a free chat group that I host on the Moomoo app. She's the one that originally brought this to my attention, and she's the reason why I've actually made thousands of dollars swing trading, scalp trading ICU. So thank you, Mags, and thank you to all the leadership in the Moomoo Chat. Guys, if you aren't part of the Moomoo Chat, if you don't have the Moomoo platform, if you join, it's available in the US, Australia, and Canada, and they'll give you free stock. In the United States, they'll give you 16 free stock. But personally, the primary reason for joining Moomoo would be to participate in the free chat group called Stock Josh Fam and to join the community over there. It's a great community, and this last week they've been making a ton of money, and I've got great leadership over there. Got a shout out to Airtwan. I got a shout out to Miss Mary. Thank you guys. But let's talk about Mag's penny stock pick. And before you FOMO into it, the reason why I'm talking about this today is not so that you would pick up your phone and immediately buy some, but that you would understand something about trading momentum stocks and trading penny stocks, and that you would know exactly how I do it, because this has played out. This and Femi was the last penny stock I talked to you guys about. Both of them played out exactly as I predicted. And right now, I entered into a position on ICU off of a bounce off of the 9 EMA. And so what I want to do is we're going to do a little bit of a trade school. We're going to talk about moving averages and indicators. And one of the best one for momentum trades is the 9 EMA. And if you can't put that into the platform that you're using to trade on your phone, you can go and open up a free TradingView account, and then you can search 9 EMA under indicators, and you can add it, and you can see what I'm talking about. Real quick, before I do that, let me just tell you a little bit about the news story that got this stock moving, which was SeaStar Nuwellis up on regulatory update for kidney injury treatment device. And so what this means is the FDA has initiated some correspondence with this company saying we're going to approve you for this device that actually treats acute kidney failure in children. So they are going to possibly be moving to a place of profitability. It's great news. Anytime you get a FDA approval and you're a medical company, then you are obviously, the stock is going to be going higher. But there's going to be limitations to that. The approval hasn't been finalized, and so there can be some hiccups along the way. But we're not looking at this as a fundamental trade. We're not looking at this as a long-term investment. I'm just trying to teach you about the 9 EMA and on momentum trades. So now the first time I traded this, I didn't even worry about the technicals. I traded the news, and that's oftentimes how people approach momentum trades. News comes out, people jump to the stock. I got in pre-market before the regular stock trading hours, and the thing just skyrocketed up quite a bit. But after that initial moment, and I wasn't greedy. I took like 10, 15 cents off the move, but I bought a couple $1,000s worth, and it was a nice, beautiful profit. But now that it's cooled off a little bit, I came back to check it, and I saw that it was very close to bouncing off the 9 EMA, and that's where I decided to take a risk. Of course, I put a stop loss in just a couple pennies beneath that level, because if it's not going to bounce off the 9 EMA, then it's no point in me even messing with it. But for the opportunity that it could bounce, and here's the thought process. If it's got a bullish future, if it's possibly going to continue to do well, if there's life in the move still, it should bounce off the 9 EMA, and that's exactly what it did, and I was able to pick up another 10 cents. And so let me just go into a little bit of a trade school. What is the 9 EMA? I'm just going to read this to you, then I'm going to explain it to you. A 9 EMA strategy is most effective for short-term investments. Those are your day trades and your scalps, as it emphasizes recent data points more heavily than past values, giving more importance to recent trends. Its accuracy is typically higher than other moving average indicators in conditions of rapid price change. And so basically what they're saying is the 9 EMA is the one that you want to use when a stock gets a good news story and begins to take off quickly, you want to see how it respects the 9 EMA. And if it does, you could possibly get a handful of bounces off of the 9 EMA until eventually one day the 9 EMA will break. And that's a good signal for you to take profits or to get out. Now, I'm just going to tell you guys that I don't want you to FOMO. I'll show you this little area where I think possibly could be a place of re-entry, which would be around 53 cents. So if you're not in it, leave it alone. But if you want to track it and consider taking a position, you could put it in at 0.53 cents and you could put your stop loss at 0.49 cents or 0.50 cents. And again, small cap, penny stock, small position size. Don't put your entire portfolio in this and pull a Hail Mary. That's just not the way that you should trade. You're not going to succeed that way long term. It's going to be like flip of the coin and you're just gambling. All right, let me quickly dive into some other important trades. And before I get into these, I want you guys to know that I've been given great technicals to the Patreon, the Discord that I have with the Stock Squad. That's Stock Up with Larry Jones, Keenan Grace, and Stockmo. And I entered into that Discord kind of thinking that I was going to be, feeding stuff to people. And I didn't realize that I was going to be getting some great trade ideas from the other three guys. I just didn't even think about it. But I love being in the Discord because I'm able to share trades. I'm able to, again, kind of see what everybody's talking about and maybe then turn and do some technicals on it. And sometimes that opens up my eyes to opportunities. And then, of course, I've got great calls being made by the other members of the Stock Squad, Keenan, Mo, and Larry. And so if you're not a member, I would stop what you're doing, click on the link, which is in the top pinned comment as well as the description, and make sure you get into the Discord. But if you need help with your trading, and that's where help is being offered. All right, let's talk about AMD. I made a call on AMD. I made it early. I let everybody know, trade alert. I made a video about it in advance, and it worked out exactly as I suspected. We went all the way up to $111, which was the neckline that I was targeting. And when we hit that, I turned right around and I rode some puts down on the volatility after the CPI. So literally everything's been working as clockwork. And because it came down and it's still in a momentum move, when it came down and kissed the 9 EMA, I took a chance on it because it wasn't the only indicator I used. I've got an ascending triangle that as long as it's above, I have to respect the fact that it's in bullish territory. And because it had come back on the 9 EMA and it was found support on my ascending triangle, I took a chance with more calls. And right before I'm shooting this video, they were all up and in the profit. And I'm going to be a little bit quicker to take profit on those. I think I was up around $200, $300, and maybe by the time I'm done, my take profit will have hit. I'm looking for about $500 on that trade. Nothing big because I'm really watching it at this point to enter puts for a longer move down. But let me just give you guys a signal. Even though all of the charts of everything look terrible, all of them have these really ominous candles, I'm actually not convinced that this market is fully ready to capitulate. And I might be eating my words on Friday, and I'll come back here and tell you I was wrong. But at the moment, I largely think we're going to still see some choppiness. And so the bears that load up too early, thinking that this is the end of the run, might get smoked. And you say, well, Josh, are there any indicators as to why you might think that? Yeah, I'll give you one of them. Apple. Apple looks to me like it actually was showing some strength in the midst of the chaos today. And I think that Apple could want to get up to 185 because I think that there's room up, not just there, but there's room up on Tesla, there's room up on Nvidia. And so I'm going to have to make these markets prove to me that they want to go down. Right now, it was an ugly, ugly reaction to the CPI, but I wouldn't be shocked if there shows some signs of life before the end of this market day and tomorrow morning. But I'll keep you guys posted. But at the moment, like I said, I took some risk on with Tesla and AMD and with Amazon and a couple others. And we'll see how that plays out going through the end of this day. I will give you this last thought on any of these big momentum plays and these big tech companies. You want to buy support but in this volatile environment, keep your position size a little bit more moderate because the overall markets haven't spoken yet. We don't have a strong confirmation. We're not at the bottom of the trend, so you don't want to be loading up. We're actually closer to the top of the trend, but we've yet to get confirmation of going lower. I'm just going to mention, I'm not going to show you a chart of Costco today, but Costco's breaking out. I do want to talk about Costco soon because what I see in the charts is that it looks to me like it wants to break a lot higher, and I will break that down for you guys in a coming video. I also wanted to point out Walgreens, which has been down on its 52-week low, was one of the top movers today, and that could be a signal of a reversal. I'm probably going to squeeze in some analysis of Walgreens either here or in the Discord. So if you're not a member of the Discord and you want to know what's going on with Walgreens, I would suggest you go check out the Patreon. All right, and then the last thing I wanted to cover with you guys today, let me go over a couple more things, is the QQQs. Guys, if you look at this chart of the QQQs, I want you to see that whenever you've got a series of descending parallel channels, they always break to the upside. And the QQQ has just a series of these channels constantly breaking to the upside, and it's obvious that we're in one now. Now, it's not a guarantee that we'll break to the upside, but if we do get above, I think it's 374, with some volume, then it means that the markets could absolutely, that could be the buy signal that we're absolutely going to go on to all-time highs for big tech. And so watching the QQQs very carefully. Now, if we're wanting to get in on a conservative way for any calls on the QQQ, more conservatively, support for the QQQ is at 362. But again, we could pull back to 362, but overall, this chart still looks bullish to me. And I don't want you to get too bearish because this is not a breaking down chart. This chart is pointing bullish to me at the moment. All right, that wraps up everything. Guys, thank you for joining me today. Thank you for hitting the like. Man, say hi, throw a heart in the comment. I will be over in the Discord a little bit later after I get this video posted. Appreciate each and every one of you. If you need help trading these markets and you need better analysis of big tech companies like the Magnificent Seven or crypto, you got to hit the subscribe and hit that YouTube all notification bell. Don't miss a single video if you are actively investing and trading these markets. Again, thank you guys for joining me. Peace and blessings. We'll talk to you soon.